Yes. Good afternoon, everyone. I am Rana Ravi from Committee on MSME and Startup. I would like to welcome our speaker, CA Nidhi ma'am and CS Charmi ma'am, and our coordinator, CA Richa ma'am, for today's Pathshala series. Richa ma'am, over to you.
Hi, good afternoon, everyone. I am C. Richa Goyal, practicing chartered accountant. So today we are having a webinar on MSME IPOs, and we have two eminent speakers, CA Nidhi Maheshwari ji and CA Charmi Darul. So let me introduce both the speakers to you by reading their brief profile. So, first of all, I will introduce Miss Charmi Darot. She is an accomplished CS and law graduate with decade of experience in regulatory compliance. She has been with NSE for a decade, currently serving as a chief manager in the listing department. Throughout her tenure at NSE, she has demonstrated her proficiency in regulatory compliances and corporate governance. She has managed compliances across multiple regulatory frameworks, working closely with her team to ensure adherence to ICDR, that is, Issue of Capital and Disclosure Requirement Regulations, LODR, Listing Obligations and Disclosure Requirement Regulations, Takeover Code, and Insider Trading Regulations. She has also participated in various discussions and initiatives at SEBI aimed at shaping and refining regulatory frameworks. Her current role involves a keen focus on IPO processes, where she oversees compliance and approval procedures, ensuring companies meet regulatory requirements before listing. Now, let me introduce you to the other speaker, CA Nidhi Maheshwari. So, our speaker CA Nidhi Maheshwari is a chartered accountant with 12 years of professional experience in leading business across various sectors like SME, mid-market, and startups. She holds a manager position at NSE and is responsible for SME IPO business development in North region of India. Now, I would like to call our speaker, CA Nidhi Maheshwari. Please continue with your thoughts.
Thank you so much, Richa ma'am, for your kind introduction. Good morning, good afternoon, everyone, and a warm welcome to all of you on this webinar, a knowledge sharing session for SME IPO alternative as a finance alternative. At the outset, I would like to thank ICAI and all the team members of MSME and Startup Committee for organizing this webinar. And I'm sure this webinar is going to be very knowledgeable for all the participants who are present here. And thank you once again for joining this webinar. In our today's presentation, we will broadly cover about our NSE Emerge platform, which is a dedicated platform for small and medium enterprises. We will cover what are the eligibility criteria, what are the process, how a small and medium enterprise can come in enter into the capital market and can raise the funds for through the initial public offer. In addition to this, we also would like to cover what are the roles and opportunities available being a CA professional in this webinar. So let me share my screen. Just give me 1 minute. Please confirm once my screen is visible to you.
Yes, ma'am, visible.
Sure. Thank you for confirmation. So we will start a brief introduction with the National Stock Exchange. I'm proud to tell you that National Stock Exchange is world's largest derivative exchange for 5 consecutive years, as per the data maintained by Future Industry Association. It has been ranked second in terms of trade in the equity segment in the world. If I need to talk about market capitalization of or I can say market value of all the listed companies of all the shares in the market value of all these listed shares is around 5.16 trillion USD dollar as on the date. On the right side, it is mentioned what are the NSE offerings at its platform. So we do have both the market, primary market and secondary market. In primary market we do have two boards. One is for main board, where large and mature companies can come and raise the funds. Other is SME segment, which is our today's topic. Other than this, we do have electronic bidding platform, public debt market. We also have a dedicated platform for green and sustainability bond, and a very unique concept we have introduced very recently, that is social stock exchange, where a NPO, non-profit organization, can come and raise the funds. So these all are the products at the national stock exchange a person can work. Now, like we have mentioned initially, that today our topic is SME, small and medium enterprises. So first we need to understand how this sector is important for a from the point of country. So this sector contributes 30% of our India's GDP, which is very much important for any economic growth. This sector is a backbone. This MSME sector is backbone for the India's export, which contributes around 40% of the export of India. So if this sector is so much important, then what is the problem statement? What is the thing why these SMEs are not able to scale up? The reason behind this, because they don't have right access of capital in the right amount at a right time. So here we come with our dedicated platform for these SME companies, where these companies can come and raise the funds and can use these funds for the business growth. What are the criterias? We will talk about those criterias in later slides. So this NSA emerged, like I have mentioned, it's a dedicated platform for these small and medium enterprises. This was started in September 2012. It is regulated by SEBI, and it operates in a separate segment, but operates as main board. Now I'll talk something about the data. So till now, in last 13 years, total 634 companies is already listed. These 634 companies have collectively raised around 18,000 crore. And market capitalization, again the market value of these shares which are listed in capital market, it is around 2 lakh crores. So please see the difference. These companies raised around 18,000 crore, and the market value as on date is around 2 lakh crores. So this is the value that have been added being a listed company. If I need to talk about average fundraising, it's around somewhere 28 to 29 crores. And out of these 634 companies, 144 companies have already been migrated to the main board. So how it works? First, a company come on the NSE merge platform. They get an idea how it is being a listed company. They get familiar with the corporate governance, compliances, how it is being a listed company, and they become large, graduate, and then migrated to the main board. Now, like I have mentioned in my in this slide, that 634 companies have been listed. So let's see the journey of these 634 companies. So first 300 companies we have, we to do these 300 companies, it took us 10 years, and next 300 companies were listed in last 2 years, that is in FY23 and FY24. So my question here is 634 companies a number, is a good number? I'll say yes, because as per you can see on my chart, first 300 companies were done in first 10 years. So this chart actually shows how this SME segment has been evolved over the period of the time. And you can see in this chart, like FY23, 24 and FY24 and 25, in terms of capital raise, have been phenomenal. In FY24, total capital raised by all these SME companies were around 4,600, and in FY24-25, this is about 7,000. Now, next question is, what is the potential? If I need to talk about these SME companies, so total registered SMEs are around 3 crores as per the MSME portal. Out of these 3 crores, 70,000 are medium. I'm not talking about even micro and small. I'm talking about the medium companies who are actually eligible for these IPOs. So out of this 70,000, only 634 companies are listed. So gap is huge. So I can say potential is there, but what we need to understand what are the criterias, how these companies can enter into the capital market. So we will cover these things in our later slides. Now we will talk about the eligibility criteria. So as per the SEBI eligibility criteria, it should be a limited company, and with respect to paid up capital, it is divided into three segments. First, if a company's paid up capital is less than 10 crores, then they have one option that it has to be listed on an SME board. Next is if paid up capital is between 10 to 25 crores, then SME on main board they do have option, either they can come on SME or a main board. If its paid up capital is more than 25 crores, so mandatorily they have to get listed on the main board. So this is SEBI eligibility criteria. In addition to this, NSE also have some other criterias, because being a approving authority, being a exchange, we need to be more stringent with respect to eligibility criteria. So what are these criterias? First of all, we see that a company should be operational for last 3 years, 3 years operational vintage. Out of this 3 years, 2 years should be profitable, and for 2 years, one minimum profit, that is operating profit, should be 1 CR. Other than this, net worth should be positive, and free cash flow to the equity should be positive at least 2 years out of 3 financial years. Now we question comes, what is this free cash flow to the equity? So free cash flow to the equity is basically calculated from the cash flow of the statement. Being a CA, we all know how this cash flow statement is important. It's a financial tool to check the health and wealth of a company. So how we calculate this FCFE? This is simply a cash flow from operations minus capex plus net borrowings minus interest expense. The significance of calculating FCFE, checking FCFE, is basically to check whether a business is viable, it's generating cash, and generating sufficient cash to operate, to cover its capex and opex, and there is something free cash flow available to invest further. So this is basically a very important tool to check before entering into a capital market, whether company is generating a free cash or not. So this is about a basic eligibility criteria. Next is with respect to regulatory framework. So when a semi company enters into the capital market, so dilution is should be there at least 25%. Other than this, a company has to file DRHP, which is we also see offer document. DRHP is a very detailed document for which we will discuss later. Other than this, 100% underwriting is mandatory. 100% underwriting, why it is mandatory? So just to ensure the company who is coming to the market will get what they are seeking. If they are looking for to raise 25 crores, so why we say 100% underwriting is required, so that a issuer company can get 25 crore for which they have applied. Other than this, market making for 3 years. Market making is a intermediary who is available in the market for both the side, for buying and selling. So like SME market is risky market, it's a volatile market. So SEBI has introduced this concept of market making to safeguard the interest of the investors. So 100% underwriting and market maker, both the concepts are concepts are applicable in SME companies only, not applicable for the main board. Next is migration. So like I have mentioned in my previous slides, migration from SME companies to main board companies is also allowed, but subject to certain conditions, like paid up capital should be more than 25 crores, and there are certain other conditions that company has to fulfill. 3 years of vintage, being a listed company on the NSE merge is also one of the condition. Other than this, post-listing compliance, so a company has to compliance after listing. And on this, my colleague Charmi will, give in detail. Uh, FCFE we had already discussed. Now moving to other criteria. Like I have mentioned basic criteria, 3 years operational. Out of 3 years, 2 years should be profitable, and for 2 years, minimum of, profit should be 1 crore, positive net worth, and less than 25 crore paid up capital. These were the basic criteria. Other than these criteria, there are some other eligibility criteria as per the SCDR norms introduced by the SEBI. So next is offer for sale. First, we had already discussed that is minimum operating profit. It should be 1 CR for 2 years out of 3 years. नेक्स्ट आता है ऑफर फॉर सेल सो ऑफर फॉर सेल इज कैप्ड एट 20% of total issue size or and selling shareholders cannot sell more than 50%. So why it is kept in a SME, though there is no condition kept for offer for sale in main board? The reason behind, because in SME basically a promoter is main person who know and who is running the business. So SEBI, just to safeguard the interest of the investors, plus to ensure that promoters vest the interest in the business, even being a listed entity also. So it is kept that a promoter, existing shareholders cannot sell its shares more than 20% of total issue size. Next is restriction on repayment of loans and from promoters and promoter group. So when we prepare a DRHP for filing SME IPO, there is one column where we need to mention object. So what are the objectives? What are the purpose? What will be the end use of the capital raise? So for that, the main purpose for raising business should be to invest in business only. It should not be a free payment of promoters who have invested in that business when it was started, or it is continuing investing in terms of unsecured loan. So SEBI restrict on that. Other than this, conversion of partnership and proprietorship LLP to company. So in my basic eligibility criteria, I have mentioned this company should be a limited company, and a limited company will be converted from a private limited. So if a company, if it's a partnership, if or it's a proprietorship or it's a LLP, so first and foremost thing they have to do, they have to convert this company into a private limited company. Only a private limited company can file the DRHP. If someone who is running the business in partnership as of now and is looking to further to raise the fund, so the first step they should do, they should convert their partnership into a private limited. And after converting this private limited, it should be in existence in first one full financial year. Once your financial year is completed, one full financial year means starting from April, ending on March. You should have the audited financial of that before filing the DRHP. So this is the criteria recently added in month of March. Other than this, minimum application value is 2 lakh and in 2 lots. Why minimum application size is 2 lakh? Because we trust that who is investing in SME market is more informed investor versus who are investing in main board. Because I have mentioned that SME is a volatile and risky. So just to ensure liquidity, just to ensure that investor who is informing, who have a capacity, to set aside of 2 lakh rupees for one lot, will be informed, investor, and would be having the knowledge of doing financial analysis before investing in a company. Now, next is number of allottees. So minimum allottees should be 200. GCP, like I have mentioned, that there should be object, and object should be clearly defined where this money is going to invest or going to use in the business. So purpose can be working capital, it can be capex, it's a combination of both. So there are some point which is not defined at the time of filing the DRHP. So we generally say GCP can be a 15% of amount being raised, or 10 crore, whichever is the less, can be a part of GCP. Next comes a part of eligibility criteria, that is public disclosure of DRHP. Public disclosure of DRHP means when a company file the DRHP, it will be available to the public for 21 days. If someone has any comments, any thing to highlight, they can actually make that. Paid up capital, I have mentioned it should be less than 25 crores, but if it's more than once you get listed on SME and your paid up capital becomes 25 crores, so you can be a part of that SME much, but you have to follow the all the rules and regulations as the main board company. Now, next is monitoring agency. So this is recently added and a very important monitoring agency. Basically, if issue size is more than 50 crores, then introduction of monitoring agency agency is compulsory. If issue size is less than 50 crore, then issue have to submit a certificate from the statutory auditor for utilization, whatever and whenever they are utilizing the issue proceeds, they have to certify it and submit it with the exchange. Now, allocation in the net offer, it is same as it is in main board, that is 35% in retail, 15% in non-institutional, and 50% in QIBs. So this is all about the basic eligibility criteria as per the ICDR norms, what we had just discussed. Now coming to the point, when can a company list on NSE Amarch? So it is very important slide for today, because a company wants to come into the capital market, but they don't know when, whether I'm eligible or not. So so there are some steps which concludes. So I'll start with the first one. The first is the startup. Startup means the idea, when a promoter, a person get an idea to start the business. So at this stage, can the company can come into the capital market? Answer is no. So at this stage, who will fund the idea? So it is something a bootstrap which is funded by either its own capital or friends and family. Once you start your business, your idea is tested and verified. Now you want to develop it at the development stage, where you want to develop your product, develop your business. Then it comes early stage. So at early stage, it can, and you need a fund, you need the funds. Then these funds will be funded by either angel investors, either there are various schemes of government for the startup entities. It can be funded by those, and long term debts. Once your idea is tested, verified, and find the market and find the scalability, now you want to grow, you want to expand. So here NSE Amarch comes into the picture, where you can come on our platform. So at the growing stage, when I'm saying growing, so it means a company's business has been checked, tested, it is generating profit, and now it is eligible for further expansion, so that company can come on the NSE Emerge platform. Once you come on the NSE Emerge platform, raise the funds. Later on, this company become a large company, graduated, and it generally migrated to the main board. So this is the basic step where a company can come and list on the NSE Emerge platform. Now next is how a company list on NSE Emerge. So now you have your client, it is eligible. You know you want to go to the capital market, but you don't have any connect. You don't know what is the process. So this slide basically tells the process. Even here it is say step one, interaction with the NSE SME team. I would like to say the first step is to interact with their chartered accountants. SME and CAs, SME promoters and chartered accountants, sit together and discuss ki this is the thing we want to do. So first step is you can connect with us. The NSE SME team is available. Though it's a myth in the market ki exchange officials are not available. Where we need to discuss, whom to discuss. So here we can say on this platform that NSE officials are very much available and approachable. You can connect to us at a very initial stage, where we can guide you or help you in deciding the factor whether this company should come as of now or should wait for some time. Once you connect with us, next step is appointment of intermediaries. So these intermediaries are like merchant bankers, market makers, underwriters, registrars. There are multiple, intermediaries involved in the IPO process. The main is merchant banker. So merchant banker play a very, critical role. They lead the show. So merchant banker is one who prepare your DRHP, who connects with you, with the other parties. So here, once you appoint your merchant banker, a merchant banker is responsible for preparing the offer document, and this offer document is basically filed with the NSC. Once NSC get this, filing of your offer document, or I can say a DRHP, then NSC comes into the picture where they start. NSC, our regulatory team, start working on it, and they do a proper due diligence, share the observations upon receipt, satisfactory response for the observations. If it's fine, then in principle approval comes. In principle, this in principle approval is valid for 1 year. When you find that, market is conducive, you can come and announce your IPO. And this IPO can be open to 3 to 7 days, and after, at the close of the IPO, it's a time, on the third day, when you can come and formally list your company. So this is basically a process where our company can come and list on the NSE Emerge platform. Now, till now, we had discussed what are the, eligibility criterias, what is the process when a company can get listed. But why should a company get listed? What are the benefits being a listed entity? So I will tell mainly 4 or 5 benefits which you can also use as a pitch to pitch your, promoters, SME clients. So equity can be used for funding purpose, which is not need no which where there is no need to repayment. Unlike the bank loan, so bank loan has its fixed, monthly repayment. Unlike equity, so equity, you can use in your business growth, and you can easily focus only on the business growth. There is nothing related to EMI repayment, or there is no need for repayment. Second, if we use the internal accruals to do the capex, to accumulate that, fund, it takes around 5 to 7 years for that expansion. While if we use this option, being, a listed one, then it can be done in 18 to 24 months. 18 to 24 months, why I'm saying, because IPO process is a lengthy process. It can be, done in 6 months also, but on the maximum side, I'm saying it will take 18 to 24 months. Unlike if you use internal accruals option, which will take 7 to 8 years to do that capex. Next, third benefit is unlock the enterprise value. It is obvious, when you come into the capital market, your shares get some value, unlike unlisted one. Once you have your, shares value, you can go to, market, or you can go to bank can sanction the loan basis on your valuation of the shares. And there's many, uh, the many, opportunities open for being a listed entity. Other is your visibility has increased, your credibility has increased being a listed one if you compare the unlisted company. Last one is, there are some sectors like IT sectors and other sectors where fundings are difficult to obtain. But this is the right platform where a company can come and raise the funds. So these are basically benefits. No EMI repayment obligation. Enterprise value unlock ho jata hai. Plus capex funding is easily option available for this, and visibility and credibility goodwill has, increased. So these are the benefits basically being a listed entity. Now, this is, I think, a very important from today's perspective webinar. What are the opportunities available for a practicing chartered accountant? So, like I have mentioned in my last, these are the benefits. Still, companies are not getting listed. The main reason, there is lack of awareness. Though there are many reasons, but one is lack of awareness of this SME IPO market. Many of people doesn't know about this segment, about this SME IPO avenue. Though Delhi, Maharashtra, and I think Gujarat are very matured market being a SME IPO, but other than these states, There is no knowledge and no awareness for this SME IPO. So here, we are trying to connect with CAs, with other professionals, with other government departments to create the awareness. And I think connecting with chartered accountants are more important because CA play a very vital role in SME ecosystem. Other than audit, accounts, taxation, and other work what CA are doing as of now, there are so many opportunities available for SME IPO ecosystem, and I have tried to capture some. What could be the role a CA can play in this SME IPO space? So first is role in DRHP preparation. So for preparing the DRHP, सबसे पहले we need to do to educate our SME promoters, uh, their team, and how to educate them. We need to remove the fear. So us a CA can do that. A CA has to remove the fear, remove the fear from the SME promoter's mind, like what kind of fears we have seen, we have observed as of until now, like capital market is not for small and medium enterprises, it meant for only main and large companies, and there are so many other myths as well for the SME going public. So our CA here play a very vital role to educate them. This is one. Second, uh, uh, they can also provide IPO consultancy services. They can be a part of this IPO process because in an IPO process there are multiple services. For example, they can be a part of financial due diligence. They can be a part of audit services. Other than this, pre IPO also, before coming in market, there are multiple things that a CA has to do. For example, project preparation, restatement of financial statement. I have already mentioned about the financial due diligence, financial reporting, compliance expertise. All these type of these assignments a CA can take and work on it. Other than this, the main opportunity what I can see, it will open a door to start their own merchant banking division. So what we have seen that many merchant banking as of now, merchant bankers are the practicing chartered accountants grown firms. So this opportunity is inherent and easily a chartered accountant can enter into a merchant banking role. So these are the roles being a CA you can have. But now next question comes ki what are the specific skills required to perform these type of the work, these type of this work. So being a CA, there is nothing additional. Only two things what I can say. A person should be familiar with the IPO process. Second, a person should have good knowledge of SEBI regulations like ICDR, LODR, and should know what are the listing criterias, what are the listing compliances. A person have that knowledge, then a CA can perform all type of the roles being associated with the IPO. So this is about the opportunity for a practicing chartered accountant. Like I have mentioned that National Stock Exchange is working with state governments, financial institutions, CACS to create the awareness about this SME IPO. So we have signed MOUs with the 14 state governments as of now, and we are working with these state governments to create awareness. We are doing events and seminars where we generally invite all the SME promoters and the chartered accountants. So this is something incentives are provided by the state governments. I have mentioned about 12 and 13 states who are providing financial assistance for getting company listed. Yeah, so this is all about SME IPO eligibility criteria process and what are the roles a CA can have in this IPO segment. So this is about all this. I conclude, and now I hand over to Miss Charmy, who will talk about the compliances and more about the DRHPs. Charmy, over to you, please.
Thank you, Nidhi. So, as a part of the other part of the session, I will just try and cover what are the regulatory requirements while we are working on the IPO processes. mainly on the offer document side, which is the important document that is being part of the journey. So I hope my screen is visible.
Yes, ma'am.
So just to start with, as a chartered accountant, if we see there is a multiple scope that you all have while working on this, the whole journey of IPO. There are considering what Nidhi has said additionally, if we see the whole journey in the as entities somebody can assist the issuer companies. There are even some certificates that would be required by these companies which the exchanges rely upon. About relating to the financials of the company or say KPIs of the companies, the order books, working capitals, and various other matters wherein the financials of the company, the figures of the companies would be viewed at. So apart from the whole thing, coming back to the IPO journey. Sure. So is it visible now properly? Yeah, thank you. So the types, the fundraise in the IPO would be either through a fresh issue or through an OFS, where in case of SME, the OFS, that is the offer for sale, wherein the existing shareholders of the company would be offloading shares, would be limited to 20% as said by Nidhi earlier. So just a brief background on how the SMEs are different from the main board IPOs on the regulation side, say with respect to the certain limits on the paid up capital. The paid up capital, if the company has to come up with an SME IPO, has to range from 10 crores to 25 crores. It cannot go beyond 25 crores. If the paid up capital of the company is beyond 25 crores, it will have to come back to the main board. The regulatory framework that would be governing would be the reviewing body would be the exchanges in the case of SME IPOs, whereas in case of main board IPOs, it's both exchange as well as SEBI. As other nitty-gritties, there would be some differences on the lot size, the lock-in period, the making requirement, underwritings, and all those procedures, wherein some would be mandatory in case of SME IPOs, looking at the size of the issues and looking at the criticalities of these issues. It would be mandatory for the SME IPOs. So this is how it differs from the main board IPOs. The SME IPOs would, in case of SME IPOs, it would be either quarterly, half yearly, not quarterly in SME IPOs, because looking at the size of the companies, again, some relaxations are given to this company, SME IPO companies. The dilutions that minimum would be required in case of SME IPOs would be as 25% basis the market capitalization or 10%, how the issue size depends upon the market capitalization, the issue size, the post-market capitalization issue size of the company as such. So once if the issue is coming up for the minimum public offer of less than 25%, again the company will have to comply with the requirement of meeting minimum public shareholding of 25% within 3 years of its listing. So this is required to have minimum liquidity in the market, that is with the public and not with the promoters. Offer document. Now the entire journey of the SME IPO, there is an offer document which is a very important document because it gives the complete details of the companies, where basis which the investors will go through the company and then decide the investments or not. So for that, the governing provisions that would be the SEBI ICDR regulations and the Companies Act provisions, which will provide the minimum disclosure that would be required in the offer document. So while going through the IPO process as the exchange, the main important thing that the exchange would be looking at would be the offer document and disclosures in the offer document. So though this document would be drafted by maybe the lawyers or the merchant bankers, the role of a chartered accountant here would be quite important as the financials of the companies, the KPIs of the companies form part of this document, which is certified by the.
Ma'am, actually your voice is not coming clear. So could you check once your connection?
Sure. Is the voice better now?
Ma'am, it's breaking little bit.
Yeah, just give me a minute. So the voice should be better now.
Yes, ma'am. Now it's better.
Yeah. So coming back on the offer document part, so here it would be very important for the exchanges as such to review the offer document. The chartered accountants that the role that play that I was talking about would be like not limited just to the certifications that they provide, but kind of disclosures relating to the financials of the company that would come form part of the offer document is also an important disclosures. So what all forms part of the offer document is the different chapters that are covered in the offer document. It would be relating to the, say, business chapter, which will cover the whole business of the company, how the company functions, what it is doing. All those details would come in. Then the financials would come in for the last 3 financial years, for how the company was performing, the revenues, the profit margins, the balance sheet items, everything will come as a part of the offer document. Then would come at the details like the management of the company, the promoters of the company, the litigations that were forming part of the against the company or even filed by the company or the promoters, directors. All those details will come in. The details of the selling shareholders in case of OFS, who is it? The details of the capital structure of the company, the government approvals that the company is required, whether they are obtained or not. If they are not obtained, what is it, the impact of it on the company? All those details will come as a whole 3, 4, 500 page document, which will form part of this, which is the offer document as such. What are the amongst the key disclosures that are in the offer document? One of the most important disclosure is relating to the key performance indicators. So these KPIs are basically will indicate how the company is performing on the financial side and why the issue price of the company. It will justify the issue price of the company for the IPO as such. So this KPI gives more importance to the transparency and comparability of the KPIs of the companies with the other peers also. These KPIs are so prepared by the management and the issuers of the company. They are validated by a chartered accountant or a statutory auditor of the company. Independent chartered accountant or a statutory auditor of the company. The law allows as such. So this whole KPI disclosure is governed by SEBI ICDR regulations, and even some industry standards are which are disclosed on the exchange website on the link that has been shared on the screen. So this industry standards provide a brief guidelines on how the disclosures are required to be done, what the disclosures are required to be done, what is to be considered and what not to be considered. So more importantly, what will be considered while by the management while giving these disclosures would be the KPIs of the company, which describe the company, how the company is performing, the GAAP measures or the non-GAAP measures, or even the operating measures. So this KPIs can be the KPIs, not just what the company feels like, but they will even have to go and look at the KPIs which the company used while sharing certain information to the investors in the company that were who have earlier invested. So what information is shared with them, what kind of KPIs are shared with them, also have to be looked at while deciding what kind of KPIs would be disclosed in the offer document. So there is no disparity in the information that the earlier investors had and the investors who would be looking at the DRHP. Also, the different KPIs that are discussed in the board meetings to evaluate the performance of the company, all those KPIs also have to be looked at and decided whether those KPIs are how the KPIs would be disclosed in the offer document. So all these things, looking at all these things, the management will decide what all KPIs have to go to the offer document. And this KPIs would be approved by the audit committee of the company and even signed by the MD, CEO, and CFO of the company, or the CFO, sorry, of the company. And then it would also be validated by the chartered accountants, as I said. However, while looking at these KPIs, the important thing that needs to be considered is the projections never should be forming part of the KPIs, because the draft offer documents do not allow any projections, future statements to be made in the offer documents. Hence, the projections have to be excluded. The data that are not verified, not certified by any party cannot not form part of this KPIs. So while anybody who is validating or preparing this KPIs have to keep all these things in mind. Additionally, these KPIs also are to be compared with the peers of the company. So yours, while selecting the peers of the company, even not just the segment in which the company is performing, but the size of the company, the exact similarity needs to be looked at. So maybe this company would be manufacturing a product, but there would be different companies, different peers who would be not just manufacturing product A, but product B, C. So how you are selecting your peer is also an important thing which has to be looked at. Since the KPIs of this company would be compared with the KPIs of that peer companies. The peer that has to be considered in an offer document has to be an Indian listed peer. Only if the Indian listed peer is not available, company can compare it with the global industry peer. So there should be minimum 3 peers considered. Company, additionally to the Indian listed peers, can compare it with the global listed peers, but definitely Indian listed peers have to be there because they provide a proper comparatives since they are in the Indian markets. So this is all about the KPI disclosures, which is very important, one of the most important disclosure in the offer document. The other disclosures that we have come across, so not going into what the kind of disclosures are required in the offer document. Here we will just discuss on what kind of observations that the exchange has while reviewing this offer document, so that once you all are preparing the offer documents, are looking at the offer documents, you can ensure that all these kind of disclosures are adequately made. First chapter being the business of the company. This chapter will not just give the what the company is doing, it will also explain how the company is doing the business. Not so, say if it's a manufacturing industry, so how the company is manufacturing the product, who are their end users, what sector it is going through, what are the different revenue bifurcations, say Indian sales, export sales, different kind of revenue bifurcation should be forming part of the disclosures. Even the capacity utilization, say if company has a manufacturing plant, at what capacity it is, the capacity was increased the company, but potential of the company to do business in the future. All these kind of disclosures need form part of the offer document. When we are going through this, we do not find many of the disclosures not form part of the business. Even here, this revenue bifurcations, the capacity utilizations, most of the informations are being certified by the chartered accountants when they form part of the offer documents. So this is what you guys can look at while the company is coming up with an IPO and what is forming part of the offer document. The other would be the capital structure of the company. Since the incorporation, how the structure, whether those issuances were in compliance with the required applicable laws like Companies Act or any other law, if whatever is applicable to the company. Whether the minimum promoter contribution of 20%, say as described in ICDR, is available with the company. What kind of securities that can be considered for this minimum promoter contribution is given for that. If those shares are not eligible, who else can give those shares for this minimum promoter contribution to meet this minimum promoter contribution? What are the number of allotments that the company has done? Who were the allottees to those allotments that were done? All this needs to be looked at while the drafting of this capital structure. So this will not just give the shareholding details, but who are the shareholders of the company would also be adequately disclosed in this chapter. Hence, it is also a very important chapter to look at. The others would be litigation, wherein the brief details of the litigations against the company, promoter, director, or the litigations filed by these promoters, directors, or the company would be forming part of the offer document. So this again would be an important disclosure that will come in the offer document. It will give the disclosure relating to how the company is performing again through the litigation side. So if there are many regulatory signed litigations, actions initiated by the regulators against these companies. All these details will come in, wherein the investors will look and decide what kind of company they are investing into. Risk factors is again one more chapter which the exchange very detailedly looks at is risk factors, because the risk factors, though classified as internal and external risk factors, but internal risk factors are maybe most important, and even the external risk factors. Internal risk factors say what are the factors within the company that have impacted the company in the past or may impact the company in the future. So if I am investing into some company and I read this offer document, I need to understand what is the risk that is associated with the company. So this may be any financial risk, any contingent risk, any business related risk, any kind of risk that the company has needs to be disclosed over here in this chapter. Again, the external risk, what kind of regulatory risk or any other risk that is not within the company but may impact the company also has to form part of this chapter. So these are some of the basic disclosures which will impact all the companies which we have covered here in this slide. But there would be many disclosures, risk factors basically, which will not just impact this company, but any other sector specific risk factors also which will impact the company have to be covered here. So that is with the risk factors. Coming to the financials of the company, wherein you all would be looking at definitely certified, since the financials are certified by the statutory auditor of the company, who is a peer reviewed auditor basically. So as you all know, there are 3 financial years data that is coming as a part of this offer document. This financials are not just audited financials, but restated financials. So I'll just quickly cover what kind of observations we have while going through the financial statements of the companies in this draft offer document. First would be, say, the sudden strut in financials. So if the financials of the company, the PAT margins, the revenues are going from directly, say, 10% margin to 15-20% margins in just a 1 year period. Revenues running from 10 crores to 80 crores kind of a revenue, wherein the justifications that have to come in the offer document do not come in. Now, this is a place where you can be advising the company what kind of disclosures can come in, because the financials is a very important thing in the draft of a document, because every investment decision mostly depends upon the financials of the company. So if I see if the financials, as I said, revenue running from is just stated that there was increase in sales. Now this is what cannot be just the rationale, how the sales increased, what did the company do to increase the sales, some supportings, those kind of details rationale should come in the offer document. Same thing goes for the PAT margins. Just by saying the production cost decreased because of the raw material cost decrease, how did it decrease? All kind of disclosures need to come in here. Financial analysis also is one thing which the exchange also looks at, comparing it with the objects of the issue. There have been cases wherein we have seen the companies have liquid cash. They have maybe not liquid cash, but liquid investment, short-term investments of something, say amount. If I give an example, say if the company has say 10-12 crores of this, and then again the similar thing, they are coming up with an object for raising funds for 10, 20, 30 crores maybe. But if you see the companies having those requirements, the cash requirements, the fund requirement within the company itself, then it becomes difficult then to justify why the company needs funds from the market. So whenever a company who is coming up with the IPOs even has to look at what the company already has, because IPO is just a way to fund the requirements of the company. But if I already have those funds with me, then why the IPO? Is a question that exchange always has if we look at the financials of the company and the balance sheet of the company. There would be many restructurings done within the company, but if once this are done, everybody here needs to be very what do you say? Details need to come. in the offer document. So if there is some acquisition, the company was incorporated, say 3 years back, but there are no complete financial years for 3 years. All these things need to be looked at because these basic things are provided in the ICDR. But when we look at the financials of the company, all these details do not come in. Also, the kind of transactions that these are being undertaken these are very important transactions again, which the exchange is looking at. If the sales and purchases are majorly from the related parties, is a big question again here. If the company is dependent on its related parties only for the whole business, and the public investors are tomorrow going to invest money in the capitals of the companies, a different box opens up, because this kind of transactions wherein there is no majority sales as such apart from the related party transaction, it's a questionable thing that exchange has. One more important thing what exchange has looked at while reviewing the offer document is there are many changes that happened from the audited financials to the restated financials. And while we are reviewing those, we understand these changes have happened to meet the eligibility criteria of the exchange, say the FCFE criteria or any other criteria. So please be mindful while doing any kind of adjustment from the audited financials of the company to the restated financials of the company, and have adequate rationales for those things, and which could be adequately even disclosed in the offer document at relevant sections. Even high trade receivables is a concern that might the exchange have. Not always, but in some scenarios, it might have, looking at the different aspects of the business of the company. High trade receivables again would be a questionable thing here. Anyways, disclosure with respect to that is always required in the offer document. The other important chapter would be, say, objects of the issue. Here, objects of the issue is the chapter which will provide the details of the funds for which the IPO is been getting coming up. So it will provide the details of the object, the need of the company, basically. Why does it need funds? So objects can be either through working capital expenditure, or any other objects, say marketing expenses or any other expenses that the company wants. But here it is not just about giving a disclosure why what the company is going to use these funds for, but it is even important to disclose why these funds are required. So say maybe the object relating to working capital requirements. If you see the working capital requirements of the companies, it need to be in the same trend it was in the past. Since the past 3 years, working capital requirements of the company are also required to be disclosed with the estimated working capital for the period for which it is going to raise funds. So if you are giving a working capital requirement, you cannot just give a disclosure in the offer document, say this is the estimated working capital, and accordingly this is the amount that the company is going to raise it through the IPO. You even have to say that funds from the IPO. There have been scenarios where the companies have said that there would be an increase in the trade receivables. Why this increase? Looking at the past, if there is no sudden increase in the last 3 years for the trade receivables, why this increase in the estimated period? All these kind of things are being looked at by the exchange. So while these disclosures are being drafted by the company in the offer document, they have to look at it, how the disclosures are coming in with adequate rationales. Moving from the working capital, there would be even objects relating to capital expenditures or any other object wherein the detailed disclosure as in what would again being done through this fund, as in what kind of capital expenditure would be done. This capital expenditure, how is it going in the past, which will be more supporting the company to explain why this capital expenditure is required to be done in the future. All that kind of disclosures are required to be forming part of the offer document. Even not just the rationals, but also the licenses and approvals that are required to be obtained by the company. All those details also are required to be provided, just to look at if the company already has those licenses or the company is required to obtain those licenses in the future. So just to see that if the company do not obtain those licenses, how the funds will flow in, all that kind of questions are answered here. So the object section of the the DRHP needs to be very clear. It cannot be vague or ambiguous object. It needs to be very clearly stating why the object, how the company will implement that object, the timelines within which that object, the fund would be utilized, and what benefits the company would be getting out of the utilization of that funds. So here again, as a chartered accountants, you can support the company in making this kind of disclosures in the offer document, providing additional adequate rationales. Also, in case of capital expenditure, the exchange would be looking at the vendor, the details of the vendor, who are the vendors providing it. So all those things need to be kept in mind, and accordingly the disclosures have to be drafted. One more important thing here is regarding the firm arrangements. So if there is any project that is to be funded through the IPO proceeds, and the project is not 100% being funded from the IPO proceeds, the remaining part of the project, which is not to be funded from the IPO proceeds, the company needs to have firm arrangements for that proceeds. And the regulation says at least 75% of the amount relating to the amount which is not being utilized from the IPO proceeds, that amount 75% the company needs to have firm arrangements. So here the company may utilize loans from the banks towards that project. So that loans, they need to have final sanction letters, something of that sort, which the exchange will be looking at again. If they do not have those, again there is a non-compliance with the regulations, and the IPO may not go ahead with if that object is part of the offer document. Other is the common observations. Some common observations that we have is when there are litigations relating to CBIs or any other regulatory bodies, if adequate disclosures are not there in the offer document, and even if the disclosures are that, what is the impact that it will have on the company would definitely be looked at by the exchange while reviewing this offer documents. The drafting as such, anyways, there would be lawyers or merchant bankers who would be advising the company on that part. But definitely, as we discussed, drafting has to be very clear, and the disclosures in the offer document should not be contradicting each other. So if this kind of observations that we have are not met with, the compliances are not made with the offer document, the exchanges have now come up with a policy which states that if the XYZ scenarios occur, exchanges do have the right to return the draft offer document of the company. So that so this policy is hosted on the exchange's website on the link shared on the screen. So you all can go through this policy as such, which has some elaborated scenarios in which the draft offer document can be returned. So in order to avoid this returns and all those kind of scenario, we have given this policy so that in advance, you can go through that policy, go through that scenarios, and ensure that these points are not getting triggered in the draft of a document that is being filed by the company. In some scenarios, if we see the issue is highly impacting, the problems in the draft of a document is highly impacting the IPO, the exchange as such may even decide to bring a bar of say 6 months on the cooling off period, say on the issuer company or the merchant banker. But in some scenarios, it might come on the issuer company, which will bar them from getting an IPO for the next 6 months. So it is very important for all the intermediaries for an IPO who are working on an IPO to look at what the exchange required and what kind of regulations there are in place, which will give a proper disclosure in the offer document. Since offer document is the most important document basis which the investments in the company are decided in the IPO. Just to give you a glance on the trend of the SME IPOs that have happened in the last few months, the number of IPOs that have filed, the number of IPOs that have approved by the exchanges, and the number of IPOs that have been withdrawn upon exchange raising certain concerns in the draft offer documents that they have received. So this is a brief snapshot of how the trends have been. Coming back to the exchange procedure, upon filing of the draft of a document, after the filing of the draft of a document, how does it flow is like, first the draft of a document is submitted in the online portal of the exchange, which is called NEEPS portal. Once this draft of a document is uploaded, it's also hosted on the exchange's website, and even the exchange reviews that along by posting along with being posted on the exchange website. even 21 days period is now given to the public investors at a large who can read the draft of a document once it's hosted on the website and raise any concerns if they have with the company regarding those draft of a document. So once the exchange reviews the draft of a document, and in principle go ahead is provided to the company to launch their IPO, through which they can launch their IPOs. And this in principle go ahead is valid for 12 months. So within this period of 12 months, the company can launch its issue, that is open the issue and then get the company listed. So once the issue is open, the draft, the red herring prospectus is filed. The bidding period goes on from minimum say 3 days to 10 working days. Once that bidding is done, a basis of allotment, that is, it will decide the number of shareholders to whom the allotments would be made. Once this allotment procedure is done, the whole listing application thing, the listing process is done with the exchange, and then the company is listed, and then the shares are available for trading in the market. So this is how the whole process goes on with respect to IPO with the exchanges as such. Some of the important checks that the exchanges would be performing while at the DRHP stage or other stages would be the eligibility checks. As discussed by Nidhi, we have certain eligibility criteria, not just the ICDR eligibility criteria, but the exchange eligibility criteria. So all these criteria would be looked at by the exchange also once the documents are being filed with the exchange. If the company is meeting the eligibility criteria, then only the further processing with respect to the draft of a document or any other stage of the IPO would be done at. There would be even internal departments the exchange is having, wherein we will be obtaining certain NOCs with respect to the shareholders, promoters, directors, companies. This is their names and PANs, just to look at if there are any actions or any debarments against them. So all this kind of checks also the exchange will be performing internally. Even the company's site visit is done just to understand how the company, where is it, all those details. Credit ratings of the companies are also reviewed, and there are even calls that are conducted with the promoters of the company so that we get a better idea on the company. Not just by reading the draft of a document, we can even discuss the business of the company with them and get a better idea while we are processing the draft of a document. So once the issue is launched, the company even has to maintain a minimum promoter contribution. As we said, 20% of the post-issue capital should be maintained by the promoter. So in case the promoter is not able to maintain that, there are some other entities which are being listed out which can support the promoter in maintaining this 20% capital. This is the list is well in properly given in the ICDR provisions, which you can refer. Also, this has to be brought in at least 1 day prior to the date of the opening of the issue. So this all has to be ensured. This 20% capital of the company is then again of the promoter in the company is locked in for a period of 3 years. So once the company opens the issue, they have to ensure this lock-in criteria also. The promoters capital beyond this 20% of the limit would be locked in for say the balance 50% for 2 years and the remaining 50% for 1 year. So it would be 20%, 40% and 40%. The 100% of the holding of the promoter would be bifurcated in this manner towards the lock-in requirements. And the other shares held by the other entities other than the promoters would be locked in for a period of 1 year. There are certain exemptions provided for lock-in, which are also covered in the ICDR provisions. So this is what briefly the exchanges wanted to cover with respect to the IPO procedures and the draft of a document, which is the most important thing which the exchange looks at. Apart from that, there are many provisions given in the ICDR, which is very clearly mentioned in the ICR with respect to the procedure, the flows, and relating to the whole IPO process, which you can look at. This is what from the exchange side, the regulatory assets, the insights that we wanted to share it with you guys. Thank you.
That was truly insightful session, ma'am. On behalf of the organizing team, it is my honor and
Ma'am,
privilege.
we have questions.
We have
I'm just handing
questions.
you. Yes.
Yeah, we can take it up, question answers.
Yeah, sure, ma'am. Sure.
I can't see the questions, sir. Can you see the questions, Ravi sir?
Sorry, ma'am.
Okay, so we have got the question. What is the minimum size for an IPO?
So there is not as such any minimum size, explained in ICDR or in SEBI. So there is no minimum, size. But we do increase that minimum it should be 20 or plus 25 crores plus. The main reason because बहुत छोटी company होगी then it would not be able to sustain for long period. That's why we say that minimum issue size should be 20 or 20 crore plus, so that because there are so many listing compliances. Listing is not only one process. It starts from being a listed entity. A company has to hire professionals. A company has to have a compliance officer. So being a listed company, there are so many compliances they have to fulfill. So what we do understand that if a company's scale is very small, they won't be able to sustain and they won't be able to do a proper compliance. That's why we increase if our issue size can be 20 or more than 20 crores. Though there is no minimum size as such mentioned in our ICDR.
All
Yeah.
right. So next question is, what are the eligibility criteria for an SME to list on SME platform in India?
So I think we have covered that in our presentation. I will again repeat basic criteria. What you need to check a company's operational window should be 3 years. Out of 3 years, a company should be profitable for 2 years, and minimum operating profit is 1 CR. This is one with respect to operational history plus profitability. Other, if you want to come on the NSE Emerge, which is dedicated for small and medium enterprises, then there should be a capital, paid up capital should be less than 25 crores. Plus, a company should be a limited company. These are the basic eligibility criteria. Other than this, one more criteria what we do check, that is FCFA, free cash flow for the equity. So what we will do now, Richa ma'am, I'll share my this PPT which contains basic eligibility criteria and other criteria as per the ICDR norms. So it would be easy to all our participants. They can go through and can check, right? And for
Sure.
detailed, I can suggest please go and check the ICDR. But for a brief, things, you can check our deck.
So
Oh,
just a small thing I would like to add here is you can even refer the exchange's website wherein the detailed eligibility criteria that the exchange has over and above whatever there is prescribed in the ICDR is prescribed on the exchange website. So even when there are changes in the eligibility criteria, they are posted up on the website. So there is a separate section wherein in detail the entire eligibility criteria is posted.
okay. So it would
Right.
be great if you can share the link as well, no, for that
We
particular.
will share that. Sure.
All right. So the next question is, how is an SME IPO different from the main board IPO?
So see, there are basic on the eligibility criteria. Just let me share my screen for the reference purpose. I'll show how it is different. Though I think Charmi ma'am has already covered it, but I'll share it. So can you see my screen?
Yes, ma'am.
Yeah, it is there. So there are some eligibility criterias are different from the main board for the SME. SME mean there is some lighter side uh, we are there to entry. So with respect to net worth criteria, like I have mentioned in SME, paid up capital should be less than 25 crores, operational profits of 1 crore in 2 years out of 3 years, positive net worth, and FCFA should be positive for 2 years out of 3 years. Versus in main board, paid up capital is 25 crores, positive net worth with 3 years history, and there are some other criteria as well with respect to net worth and the profitability. And if a net worth is negative, then minimum issue sizes starts 400 crores. Other main other things is also with respect to trading parameter, where in main board minimum allottees are 1000 and application size is only 15,000, versus here minimum allottees are 200 but application size is high, that is 2 lakhs. So a person who want to invest in SME should have to set aside amount of 2 lakh, versus in main board if they are going to invest, that is 15,000. So this is a basic criteria, though some other criteria is also there in main board, which is different from the SMEs. Yeah, I
Okay.
hope I have answered this query.
Yes, ma'am. Let me see the next question. So under KPI disclosure, the peer to be selected should be SME peer or the main board peer or any other.
So it would not be restricted to being SME or a main board peer. It would here would we say that you look at the size of the peer, look at the revenues, the profits, look at those and then decide the peer. So do not limit it to main board peer or a SME peer. Look at the size importantly and the segment that it is functioning and look at that.
So is there any maximum or minimum amount of threshold for SME to go for
So,
IPO?
so like I have
I guess
mentioned, there
you
is
have
no
already.
minimum and as well as there is no
Yeah.
maximum.
Yeah.
But what we increase more than 20 crores, and maximum is also there is no limit. It's only a company has to fulfill all the criteria as mentioned in ICDR as well as our exchange criteria. Just to mention and highlight, the highest IPO in SME as of till date is of for the 197 crores, which I think listed last year, and that is of Danish Power. The company is based out of Rajasthan. So it is the highest till now. But yeah, there is no maximum limit as such.
Okay. I guess your slide also covered the key documents required for the IPO.
Document checklist.
Yes.
Richa ma'am, I'm not able to audible. I'm not able to hear you. Sorry.
Yeah, basically I'm looking for the key documents that that we require for an IPO.
Key documents like we have mentioned a DRHP. When you prepare a DRHP, there are so many annexures actually required, like last 3 years financials, your banking arrangements. Even a list of document checklist can be checked on our NSC website. Or what I'll do, I'll share a list of documents.
Okay.
Right.
And can a loss-making company also apply for this?
No, I have already mentioned in eligibility criteria the company should be profitable and minimum operating profit should be 1 CR. Operating profit means EBITDA, earning before interest, depreciation, tax, and amortization. It should be 1 CR. So, loss making company for
Okay.
SME, no.
Right. And in what ways does the listing improve corporate governance?
On what base? Sorry, I didn't
In
understand.
what ways does the listing improve corporate governance?
So, being a listed entity, definitely a company get and the habit of preparing the financials timely. The company has to disclose and file their financials twice. One is for at first half, should I say, is semi-annually for the September and for March. And other than this, they also do the announcement of any material change in the business, whether it's related to promoters, related to management. They have to make that announcement and they have to disclose it. So these are the things a company listing makes corporate governance. Charmi, you want to add something here?
Yeah, so there are many regulations that the company will have to comply once they are listed. So this not just brings in transparency, but it gives in greater governance within the company, which they will have to implement so that they ensure the regulations and they even look after the public shareholders. So this definitely will bring in better corporate governance within the companies.
Ma'am, actually your voice was not completely audible.
So is it better now?
Yes.
Yeah, so I'll just keep my video off. I think that's creating some problem here. So I was just saying that with listings there are many responsibilities, obligations on the company that they come in through the regulations also that the company has to comply, which not just demands disclosures, but it even demands certain internal things that the company has to do. So which brings in better governance within the company as such.
Okay. So my next question is like, what kind of the investors typically invest in SME IPOs?
What kind of investors?
Yes.
So an investor who is well informed about the SME market, to be very honest, a person who have a good knowledge, what is and have a capacity to analyze the DRHP, what is it is mentioned there in the offer document. That kind of investors basically investing in the SME market.
Basically, ma'am, we will have more say here that the SME markets are a bit of a risky market. So the investor who can undertake that risk, digest that risk, should invest in the SME markets as such. If you see the regulations also, the retail investors that can invest in the capital markets, they have a minimum lot size of 2 lakhs. So the smaller investors who can get impacted because of any of the risk that comes up with this SME IPOs are restricted from investing in the SME IPOs. So this is the kind of investors that we look, the regulation looks at basically being investing in the SME IPOs.
Okay. And how does the successful SME IPO improve the credit worthiness with the banks?
Sorry, can you please repeat the question?
How does a successful SME IPO improve credit worthiness with banks?
So definitely, see, once you get you being a listed entity, your share value is there available. So when you go to bank, bank will check your the share value. You can also pledge your shares against the funding you are taking from the bank. So rather offering any collateral or any other as a security, you can also offer your shares for your bank sanction. So by this way, and being a listed entity, obviously the trust is more from the bank side. Transparency is there, so definitely it's add more credit worthiness if you go to the bank. I think I got the right question. How it increase
Right,
the
right.
credit worthiness for the banks, right?
And may I know what are the tax implications for SME, or basically for the SME post listing?
It is same. There is no difference with respect to tax implication.
Okay. Pre and post, there is no difference in taxation.
No, there is no difference for taxation.
And how does the market volatility, sorry,
Volatile.
volatility of the SME IPOs?
So yes, it is right to say that SME market have been volatile. Uh, I don't know what is the question. It is volatile. It is risky.
How
Only
does
see SEBI,
impact?
have put up so many, conditions just to safeguard the interest of investors. On the other side, to ensure the issuers to raise the capital. So it is volatile, but we do have our stringent eligibility criteria and stringent conditions to ensure that there should not be any mis manipulation of shares being listed shares.
Can you please bit more elaborate this thing? Like how it will impact more?
So it is not as such impact on anything. See,
So
what I'm trying to say, SEBI has already, imposed conditions and make their condition, regulations so stringent. For example, if I give you the example, if a investor is going, a retail investor is investing in main board, they need only the capital of 15,000, only 15,000. Okay, versus a person who is going to invest in SME market, they should have at least minimum amount of 2 lakh. So just see from this point of view, a person whose risk appetite is that much, who can set aside a amount of 2 lakh for one lot, so that person is not going to invest blindly, definitely. definitely a person going to will invest after doing a detailed analysis, detailed due diligence. What the company is, who are the promoters, what are the opportunities, how this money is going to invest, it is already mentioned in the object, right? So SEBI and the exchange both have tried to safeguard the interest on the on both side. So market is volatile, but definitely we are working and we are imposing all the conditions to make it more stable.
So basically, the risk for the investors who are investing in SME IPOs are the same as like normal market.
So generally, like it is obviously in the market, the SME has been is volatile market. Risk is there, then return is also there.
Your voice is breaking, ma'am.
Am I not audible to you?
Yeah, now you are audible.
So what I'm saying, unlike mainboard companies, SMEs are promoters driven companies. That's why I'm saying we can't say that risk is same in mainboard. Risk is also there in capital market if it's a mainboard company, right? So we can't say whether risk is more or risk is less. But what I'm saying, a person who is invested in SME market are more informed investors if I compare to the mainboard company.
Okay.
Any other
When
question?
you okay. Yeah. So what sectors have witnessed maximum SME IPO recently?
I think all sectors, there is not as such specific. Chami, you want to add something?
So there are many manufacturing industries that we have come across, but for SMEs, if you say there would be different sectors that have been coming up, even innovative new sectors that have been coming up with this, looking at this SMEs. Since the size of the company is smaller, they are into very different kind of sectors they are working into, and those kind of IPOs have come up. That's what we have seen.
Right. And there are two, three more questions, ma'am. So how much does it cost for an IPO at SME?
If we talk from the point of view exchange fee, so when you file the DRHP, there is a fee of around 25 to 30,000 for filing the DRHP, and after that, once IPO close, so there is an option with the issuer company if they want to conduct a listing ceremony. So there is some listing fee that is around 2 to 3 lakh. So total the expense comes for National Stock Exchange that company has to pay is around 2 to 3 lakh. So this is one. Major chunk, the cost which comes, that is a merchant banker fee and all the intermediaries involved in the process. Though we don't go into the commercials, but generally, it depends on the merchant banker fee. But at NSC, it's up to 3 lakh.
Okay. And what is the role of SEBI as DRHP with NSE and BSE?
So SEBI is regulator, and NSC and BSE both works as per the regulations of the SEBI.
So here, if you say with respect to the SME IPO specifically, SEBI would be the regulator who would be providing the regulations which the exchanges and the issuer companies and the merchant bankers will have to comply with. So here, SEBI would be giving us the regulation. Merchant bankers and the issuer companies will have to comply with that and bring the IPOs, and exchanges would be reviewing those documents and ensuring the compliances have been done. So this is how the role of SEBI exchange and exchanges are there in the SME IPO specifically.
All right. And my last but not the least question is like, can SME list on other stock exchanges as well, like BSE or NSE?
So no, the SME company either can come for on the exchange and national stock exchange or can go to BSC. Unlike main board, so main board companies get listed on both the boards, both the exchanges, while SME have only one option, either national stock exchange or Bombay stock exchange. And here there is one more difference. The approving authority is also with the exchange only. So if a semi company comes and file their DRHP with the NSE, then approval will come from the NSE only.
Okay, ma'am.
Yeah.
Thank you so much. Um, Ravi sir, do we have anything else or shall we do vote of thanks?
No, ma'am, we don't have any other questions, so you can go with the vote of thanks.
Okay. So, on behalf of our organizing team, it is my honor and privilege to extend a heartfelt vote of thanks to all of those, to both the speakers and our team who made this session a very insightful for on MSME IPO. First and foremost, I would like to express my sincere gratitude to both the speakers. Your expert insight, real life experience, and thoughtful answers has provided very immense clarity and inspiration. Your time and effort in sharing knowledge on the IPO journey for SME IPOs have added tremendous value to this session. And my sincere appreciation to the organization committee and technical team who worked tirelessly behind the scenes to ensure everything ran smoothly. As we conclude, let us carry forward today's learning and support the vision of empowering SME to unlock their true potential through public listing and IPOs and access to the capital. Thank you once again.
Thank you so much.
Thank
It's
you.
really very nice for having us. Thank you so much.
Thank you,
Thank
ma'am.
you, ma'am.
Thank you, ma'am. Thank you so much for wonderful session. Thank you, ma'am. Thank you for coordination. Thank you, tech support team.